welcome to the London Business School and to our ninth and final session in the series, Gaining Ecosystem Advantage. My name is David Lancefield. And when Michael Iacobides and I started this session with the help of Rowena, Sam and others in the team, the great team at LBS, we wanted to create a space for executive entrepreneurs and consultants to share their stories, learn their lessons, and share their tips on how to succeed in a world of ecosystems. We've had representatives from Philips, Majid Al Futtaim, MasterCard, The Guardian, Ping An, Premiership Rugby, BCG, Charles Rivers Associates, and we've moved from health to sport to financial services to retail to media, and from Europe to the Middle East to Asia. It's been a privilege to work with Professor Michael Iacobides, one of the world's leading authorities on ecosystems. His body of work, published in all the great journals, has pioneered research and practice on strategy and regulation of ecosystems. So we wanted to close the series with a bang, positive bang, if you can have one. So who better than one of the world's leading technology analysts, Benedict Evans. Welcome, Benedict. You have one of the most, yes, you have, and I would say, one of the most incisive minds on all things technology. As readers of your newsletter, published both free and premium, and will attest, and somebody I've admired personally from afar and respected and listened to over many, many years. As an independent now, you are a venture partner at Entrepreneur First and Mosaic Ventures, and previously a partner at Andreessen Horowitz in San Francisco. And then before that, a coterie of organizations from Enders to Channel 4 to Orange and a sell-side equity.
A bunch of companies.
Probably missed out a few. Yeah. But anyway, you're very welcome. We're going to start today's session on a very simple question and topic of regulation and ecosystems. What is it? Does it matter? And where should it go as we close the year? And I'm going to invite my esteemed colleague Michael to sort of set the theme and then encourage a good debate. And I know, given our characters and between the three of us, we will provoke quite a lot of thought and discussion. Please do put your questions in the chat. We'd love this to be more than a three-way discussion. And over to Michael.
Thank you very much. And it's a pleasure to be with you and to join you virtually, David, and also Benedict, in speaking about, I guess, two interrelated questions. The one, as David mentioned, this big discussion about regulation and ecosystems. And the reason that we're looking at that is that it may, but only may, affect the future of ecosystems. So as it's the last session for 2021, we're also going to try a bit of a crystal ball, and we're going to ask ourselves what is in store for 2022 and beyond. 2019 was the year that regulators realized that the king had no clothes, that the existing regulatory apparatus was ill-equipped to deal with that, and reports in the US, the Stigler Center, in the UK, the Furman report, and in the EU, the Khmer et al. Report said, we have an issue, digital competition is different, and as a result requires different tools. Why? Well, because the nature of dominance is different, the lock-in effects, the network effects. Everyone who will be in this session will be well familiar with that. Now, the other challenge, of course, is that we had a focus on looking narrowly at individual markets. And most of the action did not happen within markets, but outside. It is how, for instance, in the growth of digital advertising, cut the oxygen from sectors which are not only economically important, like journalism, but also could be fundamental for the polity and the working of the economy, as we saw with the CEO of Guardian in our previous session. Now, of course, regulators started discussing in 2020. There was a spate of different regulatory initiatives. There were some proposals. The EU came up with the Digital Service and Digital Markets Acts. And 2021 was a year where both in the US, as a result of the appointment of Lina Khan, for instance, in the FTC and in other authorities, partly driven by the concern that the ecosystem firms are becoming too powerful, action happened. Perhaps unsurprisingly, China led the way, because if they decide to do something, I think that action is fairly swift. And we saw already significant changes, whether to Ant Group or to a number of other technology firms that have already started feeling the brunt of changes in regulation. But the question is, will that matter? Perhaps in China it does, but the system there is quite different from the one that we have in the US and the EU. And perhaps even technologies are different. So let me start by asking Benedict what he thinks is the prospect of entering 2022 as a result of the regulations that are being discussed and voted in different geographies that will change the balance of powers, will change how ecosystems work, and will change the dominance, which, if anything, has increased markedly over the last few years, part COVID, part the exploitation of all of these wonderful effects that a number of us speak about. Shut up, read the new special issue of Industrial and Corporate Change, which was a result of a meeting that Benedict was also in with the World Economic Forum a long time ago. We'll send the link. But Benedict, what's your sense? What is it that is going to change, if anything, as a result of regulation of technology?
That's a long introduction and a long question. I mean, I think, in generality, I think I often compare technology regulation to regulating cars. In that, well, there's a sort of a general point that the sort of everyone is subject to general legislation. So you're not subject to the university police. You're just subject to criminal law and accounting law and so on. But then there are specific industries that are big and complicated and important, and so you get specific legislation. So aircraft have specific regulation, shipping and oil refining and fishing and food and medicine and indeed banking have sort of specific regulatory environments because they're big and important and complicated, and so you need kind of specific sets of rules. And so it's fairly straightforward to say, well, technology has become this very large and very important part of modern society, and so it will get its sort of own specific set of regulation. And that's, we're clearly kind of at that point. The sort of statistic I often use here is that when Netscape kicked off the consumer internet back in 1994, there were probably 75 to 100 million PCs on Earth. And most of them were in America and most of them were in big companies. So there were maybe like 20 million consumer PCs on the planet. And now there are 5 billion people with a smartphone. And that's happened very quickly. And we're kind of scrambling to catch up with this sort of change in importance and to understand that. However, if one says we regulate cars, well, think about that for a moment. Well, no, we don't. That's 20 different things. And so there are rules on safety and emissions. And then there are rules on how you treat your dealer network and your supplier network. And then there is urban planning and light rail and tax incentives around parking spaces and new residential developments. And what happens when teenage boys get drunk and drive too fast, and the Dutch deciding to take their cities away from cars and give them to bicycles. And those are all different questions involving different regulators. Many of them are kind of complicated and involve trade-offs. There's not just a kind of an obvious answer. You kind of have to choose what you want. Most of them, incidentally, are not antitrust questions. There's some other kind of question. They're tax policy or criminal law or urban planning or something. And we had 75 years to work it out. It did take sort of 70 or 80 years to decide we were going to put seatbelts in cars. And the car companies didn't want to do it because they thought the consumers wouldn't like it. And then when the seatbelts were there, we all refused to wear them. And so, this stuff is kind of long and complicated and takes a long time. And when technology people kind of talk about this, there's a sort of a tendency to think, oh, this is special pleading and this is just the techies saying you don't get it. And sometimes that's true. And sometimes the regulatory request is a little bit like telling General Motors to make gasoline that doesn't burn. And the engineers say, well, no, actually, you're an idiot. We can't do that. But more often, the request is to say, no, technology policy is just as complicated as transport policy or education policy. And actually, you can't make flying cars. And you are going to have to choose whether you want houses to be a generational wealth building tool, or you want houses to be cheaper. You kind of have to make a choice there. You can't have both. And I think that's sort of where we are in technology today, that there's a lot of different questions. And so as that is a sort of a framing to go into your sort of specific question. I think most policy problems in technology are not intended to produce a radical change in the market structure and the nature of the product. When you say that you want an Uber driver to have a right of appeal if you kick Uber off the platform, you're not actually trying to change the market structure of on-demand rides. You're just trying to give the Uber driver a right of appeal. And I think, so you could kind of say that most kind of technology policy questions are sort of like that, in that you're not trying to change whole market structure and the balance of power. You're just trying to solve some sort of specific set of questions. And so most sort of policy interventions in those areas are likely to end up with added cost, reduced flexibility, maybe barriers to entry to competitors. Maybe you preclude some markets. So, for example, we see Deliveroo leaving Spain because of changes in labor laws. Now, they might or might not be, that might or might not be real, but, in principle, if you say that everybody who works for an on-demand company has to be an employee, you can see how that might mean, well, then we're just not going to have on-demand food in some places, in some circumstances. That might be a desired outcome, it might not, but that's just kind of a trade-off that you make. Then you have kind of a much smaller field where you actually want to change the structure of the market in some material way. Like there are people who think that we shouldn't have app stores, or that Apple, or you want to change the in-app payment model on smartphones, or you want to change, how Instagram interacts with other companies. And you actually kind of want to change the mechanic of the market in a sort of a fairly basic way. But even within that, and even if you look at kind of really dramatic interventions like, let's make Instagram a separate company, let's make YouTube a separate company. I think a lot of these companies are actually, or these markets, kind of look a lot like natural monopolies. I kind of think a social network is sort of a natural monopoly. And so if you make Instagram a separate company, that doesn't make it easier to compete with Instagram. If you make YouTube a separate company, it doesn't make it easier to compete with YouTube. Now, at this point, you sometimes have people kind of coming along and saying, oh, yes, but then you'd solve all the privacy problems and you'd solve all the harmful content problems, which to me, I think is sort of a form of displacement. I'm kind of baffled at the idea that if Instagram was a separate company, it would become less aggressive. And that if you gave advertisers more leverage over Instagram would be more protective of your privacy. Well, I'm not sure that's where the incentive structures would go. And at any rate, you can't just assume that. You actually have to do the analysis and say, well, why would you solve this sort of market externality if you inserted more competition? You might not. You might make that problem worse if you made the market more competitive. You certainly see that with Android in China, for example, which is one of the reasons there's been a Chinese government has sort of cracked down, is because the market was so much less centralized and there was so much more competition in many ways. There was that much more consumer hostile. You have 10 different apps on your phone all trying to steal your data and fighting each other. And so I think one has to sort of unpick that kind of question. And then maybe when the sort of a final section would be to think, well, if you actually do think that you're going to insert more competition into the online ad business or try and create more competition within the App Store market or change how Apple and Google run the iPhone, well, you kind of have to go and do a lot of really detailed work to think about how that would work. I started my career as a telecoms analyst, and there's sort of an interesting comparison here with local loop unbundling. You couldn't break up British Telecom to create competition in broadband. That's not how it works. Instead, you have a lot of really, really detailed conduct regulation. But then that sort of presumes the market isn't changing very much. And I think the great constant in tech, the kind of great driving force in tech is that sort of every 10 or 15 years, the whole paradigm changes. And when the paradigm changes, you get new dominant companies. And generally the old dominant company is sort of still around for a long time. But the new dominant company doesn't win by doing what the old dominant company was doing. So, IBM was dominant in the 70s, then Microsoft and Intel in the 80s and early 90s. Then the web becomes the dominant paradigm. IBM's still around now. Mainframes are still around now, but and Microsoft and Intel didn't make mainframes, and Google and Facebook and Amazon didn't make a PC operating system. And so what tends to happen is the market becomes much bigger with this new paradigm, and there are new dominant companies in that paradigm. And maybe the old dominant company is sort of still around, but it's not dominant anymore. Now, obviously, this is something that happens in every industry. Like shipping companies aren't dominant in the airline business, but that was shipping companies got like 100-year run, whereas Microsoft got sort of 15 years, or 10, arguably even only 10 years before the web basically started chiseling away the basis of their dominance. And so we have this sort of puzzle now. We've had smartphones for 10 years, maybe 15 years. Now what? And will the now what be dominated by Google and Apple, or will it be dominated by some other thing? And, to a regulatory conversation, regulators are all very painfully conscious that they can't take 5 to 10 years to work this stuff out. Like, that's okay in the steel business, it's not okay in the internet business. But by the time you've worked out your attitude to smartphone ecosystems, will anyone care anymore? By the time regulators worked out their attitude to Microsoft Windows bundling a web browser, A, nobody really cared anymore, and B, the stuff they did didn't work anyway. So that wasn't a great outcome for anybody.
Well, I mean, if we go back to, I'll have to just defend some of the historical analogy. If you go back to telco, actually the decision, certainly in terms of the long distance and local loop unbundling that happened as a result of regulatory pushback to the AT&T was critical in the development of the telco infrastructure in the US. But you have raised a ton of things, as usual. Let me try to unpick a couple, because some of them, I think, are really interesting, tricky questions. Now, if the question is whether technology is just a vertical, and of course, you know, in any area, even special vertical regulation does not resolve all issues, criminal issues, privacy issues, fraud issues, all of these run in, you know, throughout the gamut of any organized economic activity. And we're not expecting anything different. It's just that new manifestations of existing problems which require us adjusting the way that we look at them. But beyond that, I think that if you look at the problems that we have, is that technology or big technology companies are creating ecosystems that cut across different verticals. And the nature of power, i.e. the nature of power of those who can orchestrate these ecosystems and then set the terms for those that depend on them. And I think the Apple example is really good, because the question there is, should you, now that you have this new thing we didn't have in the past, this ecosystem who says, I'm going to set up the rules of the game, and it may be that I have exclusive access to customers. And even if you have network externalities, you're Tinder, and you know you want to say that you're big enough and you don't really care about Apple. Well, you know, if you don't care about Apple and about the fact that they're going to charge you 30% and not allow you to do in-app advertising, then you can say, I'm out and I'm only going to allow Android. Nobody wants to date people that exclude those on iPhones. There's many attractive people on the iPhone, and it's not an appropriate network. So I think that the issues that we have do raise questions that are kind of new. And these questions are that there is a nature of power which cannot be captured only in the verticals. And by the way, this may be more tech related or not tech related. It probably has to do with the power of those that orchestrate ecosystems. And I will agree with you that the efforts to deal with it may be clumsy right now, i.e. that we have not found a good set of metrics to explain what the abuse of power is. As technologies change, the nature of power, the nature of the abuses, and what society does to protect it changes. Now, I think that the problem exists, and you know the problem is qualitatively different, which is what the last few years have shown. And it isn't just a vertical; it is a nature of relationships, which it so happens to be primarily driven by companies that are benefiting using their adjacency as well as organizing the relationships in ways that make them particularly unbalanced. Now, the question that I have for you is not about the existence of the problem, or perhaps the nature of the problem, because you know there's many ways that we can analyze it, whether it's vertical or not, and I think that would be a fascinating discussion. But I really want to get your vantage point more on what you think is going to happen. So if we think more on the implications, it seems that the current regulation discussed may not really have the possibility of either making what you call natural monopolies, and I agree there are a number of these new sectors that create network externalities and the ability of exploiting them, or most importantly, the possibility of some firms to become very dominant, because you said before, there's new firms. In technology, we have not seen as much volatility over the last few years as we had seen, say, 15, 20 years ago. So what do you think will happen? Do you still think that there are these forces that are going to lead to the creation of new winners? Or is it the case that because of the benefits of the adjacencies, the locked-in user base, the visibility with regards to the customers, these new opportunities will still be captured by the same few ecosystem firms, and we'll be stuck saying, hey, are we dealing with them sensibly or not? What do you think the direction is? And do you really think that this new wave is going to create competition, or will it be the same firms as it has been over the last at least 7 or 8 years?
So I think, so several ways to answer this question. One of them is a sort of a market definition challenge. So, and even a kind of a market scope challenge. So, I wrote a piece earlier this year looking at the FTC's analysis of acquisitions by Google, Apple, Facebook, Amazon, and Microsoft. And I'm sure you've heard. We're all familiar with the sort of talking point that these companies make hundreds of acquisitions. And it turns out the number is they did about 400 acquisitions in the US. For those 5 companies, did 400 acquisitions in the US from 2010 to 2019. Okay, that sounds like a big number. Hundreds and hundreds. Well, I'm an analyst. I kind of want to know hundreds as a percentage of what? Okay, in the same period, there were 3,600 venture exits in which an exit of value was disclosed, which means like some, the ones that went bust, you'd expect, and 9,600 in total, you presume those would all be tiny ones where it was just a shutdown or something. If you look at the threshold over 50, and sort of the reason I'm getting at this is, I'm not sure people understand how many tech companies there are. So from 2010 to 2019, Y Combinator backed 1,500 US companies. And there was something over 30,000 tech companies that did their first round. And so when we talk about hundreds of companies, again, I don't think people understand this is a really small percentage of the ecosystem, the broader tech startup ecosystem, not a really big percentage of the tech ecosystem. And to the same point, so we've got these $5 trillion companies, Google, Apple, Facebook, Amazon, Microsoft. Okay. Why is it that venture VCs back 2,000 or 3,000 companies every year in the Valley? And what are they all doing? There's a huge world of technology creation outside of those very narrow, those particular companies. Go back to market definition. Supposing we're looking at the car industry. Well, the Detroit Big Three were sort of 25% of Fortune 100 earnings in the 50s. Huge companies. Okay, what if you were to say mechanical engineering? What market share do they have then? What if you were to say, highway? What if you were to include retail in that? If you were to think about all of the retailing that was enabled by the fact that everybody had a car, what if you were to include Walmart in that calculation by the 60s and 70s? And so there's this sort of, well, what is your definition here of a tech company? And, is Netflix a tech company? I would say no. It's, all the important questions for Netflix are TV industry questions. It exists because everybody's online. So this market definition problem is important. And, obviously the company being sued says we compete with the whole world, and the people suing them say, no, Ferrari only competes with people who make rear-engined Italian sports cars with horse logos. That's always the argument. But, do you think that, well, who is Amazon's biggest competitor? Well, Shopify did $160 billion of GMV in the last 12 months. It's 45% of the size of Amazon Marketplace, but it's not a consumer-facing brand. If you go to shopify.com, you can't buy anything. So it'd be relatively straightforward to do a market definition that doesn't include Shopify. Yet what does Jeff Bezos worry about every day? I quite often have conversations like this where people describe Facebook as Apple's competitor. Facebook doesn't compete with Apple, not in any sense. And yet Apple makes decisions that are a huge problem for Facebook. Is TikTok an Instagram competitor or a YouTube competitor? Well, that might not be a useful question. It's kind of both. And so I think part of the challenge in looking, we could spend all day talking about market definition here. But what exactly is the competitive issue here? You certainly wouldn't want to try and start a new search engine, but Facebook isn't a search engine. Amazon isn't a search engine, and Amazon sold probably $25 billion of search advertising last year, but it's not a search engine. So we have all sorts of kind of puzzles around, what is the competitive question here? When Apple does these things with ATT and IDFA and with App Store rules, it's very, very hard to put Facebook inside. You get these weird contortions where you say, oh, well, Apple has Apple Arcade, so it competes with Epic making Fortnite. Those are not competitors. Apple has iMessage, so it competes with Instagram. Well, no, it doesn't. And what you've actually got is people that are kind of, and I think a more useful way to think about this is that you have these companies that are building the product they want to build with a proposition that they think will succeed in the marketplace. And around that, you've got a whole bunch of rent seeking. Yes, of course, Apple does a whole bunch of rent seeking in the App Store. But the reason that Apple makes those decisions in the App Store is only sort of peripherally to optimize its revenue. It's mostly to optimize its vision of what the product should be. And the problem is its vision of what Apple wants to sell is sort of a problem for other people, because other people need to sell on that platform. I mean, there's a very sort of vague, strained analogy here with like, car companies and highways and railways. And, the fact that everybody has a car means that the federal government builds all these highways. And now that's an existential problem for the railway companies. But does that mean that the car companies are unfair competition to the railway companies? Well, no, but the fact that they're selling all these trucks means that the railway companies have an existential problem. And so you need this sort of holistic view of, well, what is the market as opposed to who competes with whom, which I suppose is a way of sort of agreeing with you. I mean, I'll make one final point and then let you answer. But I think the DOJ case over TAC is really interesting. So DOJ has sued Google because Google is paying web browsers to be the default search engine. Something over $10 billion they pay to be the default search engine. And so the DOJ theory is this is Google's abusing its market power because it's got all this money and it's buying all this stuff. Problem one, the competition is Microsoft. Microsoft has even more money than Google. Problem two, all of this money is supporting Mosaic, which is the only competitive third-party web browser. So if Google isn't allowed to do this anymore, the competing web browser disappears. Problem three, Google is giving Apple $10 billion a year because Apple has the dominant smartphone platform in America. So is this Google exploiting its market power or Apple exploiting its market power?
Apple outsourcing its power because it's easier for Google to do the dirty work rather than itself doing the dirty work. We can say,
but I think
I don't take advantage of your data. Yes, you do.
The point I'm getting at is like, you need like a kind of holistic view of what's actually going on in the market, as opposed to trying to peel off an antitrust case, which might make sense on its own right. I mean, I actually don't think the TAC case makes any kind of sense. But presuming it does, what's the outcome here? Well, Mozilla goes out of business. Okay, was that the desired outcome?
So Michael, can I just chip in with a question on that, which is, given that holistic view, Benedict, and the complexity you've described, the dynamism of the developments you've described, if you were talking with the CEO of a antitrust authority, pick one in 2022, and you call out all the issues you just described eloquently, but there is still significant evidence of harm, whether it's consumers, suppliers being squeezed, all the typical harm. Where do you go? Because sort of doing nothing probably won't be the right answer. Just letting it go, or just fast following. There'll be political pressure as well, depending on the country you're in. So where would you go if you had a blank sheet of paper and you said, right, we now need to understand the markets better. We need to understand the different dimensions of competition and so on. Given, as you said, cases take a long time. Many of these people don't understand the dynamics of the market well enough, et cetera, et cetera. They write hugely long reports, which take a year or so to come out sometimes. Where would you go if you were to start afresh, advising the CEO of an antitrust regulator on how to do this?
So I think two components. One of them is try and work out what the conflicts are. So very, very basic conflict between competition and privacy. I think I was actually at, Michael's event at the beginning of last year, and a competition regulator said, look, I go to a big tech company and tell them to do X, and they go walk across the road to the privacy regulator who says you are not under any circumstances allowed to do X. It's very, I had years ago when I was a stockbroker, I had a colleague who, if he was dealing with a difficult client who wouldn't do the trade that he was trying to pitch, he would say, look, do you want to buy or do you want to sell? I'm a broker, I can do either. And, if you sort of think about people at Instagram or YouTube, like, do you want me to make it easier to get data out or harder to get data out? Because we're engineers, we can do either, but we can't do both. You're going to need to choose. And I think that's one strand, is to just sort of think about, well, what are those tensions? What is it that you actually want them to build? Stop saying you need to make the car safer and talk about, well, what would success look like? I think the second issue is, what's the right level of abstraction here? Do you want to go and argue about the 30% take rate? Or do you want to do, as the CMA released yesterday, to say, okay, how do Apple and Google manage the fact that they are now the de facto gatekeepers for 70 or 80% of our time online? And so let's talk about in-app billing, what's allowed in the store, what APIs are open on the phone, how the browser and the browser engine works, and what the choices around those might be, and what's the right level of abstraction to go in and start saying you have to do this, you can't do that. And where is that? Sometimes that may, and I think we would all sort of understand, like break up apples to get more competition in smartphones is just kind of, everybody in the room became dumber the moment you say that. But, what are the the conduct regulations that you might want to see here? And what are the kind of conduct problems and the questions around that? And you can have that question. Then you can have a content moderate, a harmful content question. And though both of those sort of intersect with privacy. And then you can have a market power in online advertising conversation. And so you kind of need to work out, well, what are the broad categories? And then within those, what are the issues and what are the potential remedies? And you kind of have to go and do the work. And this is not like this is an RFP, go hire PwC to do the work for you, obviously, or McKinsey or whoever. But you kind of have to work out what's the right level of breaking the problem apart. And, in some ways, like don't let Facebook buy Giphy is easy. The challenge, and again, I kind of wrote about this as well, like the do you let Facebook buy Instagram is actually a really interesting one, because at the time, Facebook wasn't that big. Instagram was a pre-revenue 13-person company. Most of the commentary at the time was, this is an amazingly dumb deal. Why on earth would anybody buy that company? This is stupid. In hindsight, it looks very obvious, oh, that was anti-competitive and you should have let it done. But how do you backtest that? And I think that's the other side, is if you're going to make some sort of primary intervention like that, how do you backtest? If you're going to set a new set of principles, can you kind of run it backwards and say, well, what would we have done in this situation?
Okay, so this is fascinating, and in a way, it could be the optimistic version, because much of this is underway. And I mentioned earlier on about this special issue that's about to be out for industrial and corporate change, which is people writing about it. There's a paper on exactly all these conflicts and how do you manage the privacy versus versus regulation issues. There's a discussion by the chair of the Competition Commission of the OECD of an equivalent challenge of how do you think about the WhatsApp merger, which wasn't an issue the FTC thought in the beginning, and now says, oh my God, it was such a horrible issue and we should have thought about it. And how do you think about it prospectively? So I think that in terms of, those of us who write in this area, there's been some advantage, and some of the things you're describing, certainly by places like the Competition Market Authority, I think is broadly consistent with what you're saying. So the good news is we're kind of getting there, at least in terms of the general advice. And the rider to that is, and we're absolutely not going to avoid these trade-offs. So, Benedict, if you think about anyone who's involved in government, that environmental protection is inconsistent with maximizing investments. But unfortunately, we have regulations that if you are investors going to say, but it's crazy, you want me to invest, and at the same time, you asking me to go through all these hoops? Yes. That's part and parcel of the way things work. So I don't think we will ever, neither should we ever expect to, find something that is fully consistent. We have many different objectives. There's going to be inevitably some things that are not going to be well in sync. We can try to improve coordination. And I think we're kind of working in this direction, which is the optimistic side. Let me focus somewhere else, because what you were saying earlier on is something that, I fully agree. Essentially, you were saying that the competition is shifting from within markets to creating things that break the traditional boundaries of markets. And I would argue that this is becoming more systematic, and the fungibility of both the relationship and the data is greater now than it was at the time of neatly delineated sectors. So we see what I'm calling this free-form competition, and organizations trying to morph the environment around. The interesting question, which returns back to dominance, is this going to happen by new firms or existing firms? So let me return to this question, because I'd love to get your response to it. let us agree that a big part of the problem or big part of the excitement is that you find new ways of creating a bundle that you offer to customers. And clearly, if bundle revolves around dominance, tech firms will take both bundle and dominance. I'm not saying they're necessarily only thinking about dominance in a old style way, but they're happy to do it, especially if it helps them be successful. This question, though, about this new technologies that you see, and you're very close to the scene right now, relates to whether you think that these new bundles are really driven by new companies that may potentially unseat those that are dominant, or ultimately you see the new stuff coming from the current tech giants. So let's agree with a number of things that you said so far. The question is pragmatic. Will dominance change? And if regulation cannot change it, what would? So let's start moving into this.
So there's a sort of a basic, feature of each sort of new generation, every new thing. The incumbents in the old thing try and make it a feature of their existing product, and and sometimes that works and sometimes it doesn't. I mean, this is kind of the Clay Christensen sustaining innovation versus disruptive innovation. Sustaining innovation means yes, it just kind of gets absorbed by the incumbents. And disruptive innovation is this is some radically new thing that the incumbents just can't do and their basis of power doesn't work. This is the argument about cars at the moment, for example. Is an electric powertrain sustaining that gets absorbed by the incumbents, or is it disruptive and they just can't adapt to it? And it opens up a completely new wave of car manufacturers. And, we'll find out. There's people have opinions about this, apparently, especially if they own Tesla stock. And so if one looks at, the sort of those kind of breakpoints in the last sort of 30 or 40 years, IBM in fact created the IBM PC, and yet that wasn't really the point, that IBM completely lost dominance as a result of the shift to the PC. It remained a big company, but its dominance just evaporated.
Shot itself in the foot, really.
No, it was just a completely different industry. None of the assets that they had any relevance or would help them in any way. Then the web comes along sort of 15 years later, from the early 90s. And the interesting thing here is that it completely removed the basis of, on one sense, it removed the basis of Microsoft's power in that people stopped writing applications for Windows. People stopped writing PC applications. Or from sort of the early 2000s, all the application investment moved to making web applications. However, you need a computer to get onto the internet, and what are you going to buy? And so PC sales grow massively, which means Windows sales grow massively, except that everyone's buying them to do web stuff, not Microsoft stuff. So this is a kind of really interesting nuance in what happened. The next generation is, at this point, things start diverging because there's the web and there's devices. And so we get these generational shifts on the web. And so there's companies like AOL and Yahoo and so on. And those are completely swept away by Google and Facebook. Meanwhile, on the device side, it continues to be the PC until about 2010. And then we have these new models based on the multi-touch smartphone, pioneered by Apple, then copied by Google. Nokia is completely unable to cope. Microsoft is completely unable to cope, even though Microsoft has been doing mobile stuff since the late 90s. BlackBerry and Palm as well, incidentally. And it's always, I always like to remind people, a lot of people kind of forget, there was no antitrust case against Nokia. People always look at that transition and say, oh, well, antitrust is the reason why Microsoft missed mobile. No, Microsoft didn't miss mobile. Microsoft was pouring investment into mobile. And Nokia didn't have an antitrust case, and neither did BlackBerry. And guess what? The same thing happened, which is a classic case of disruption. They just were not able to make the jump to this completely new thing. And yet Microsoft is still around today. And people still have 1 billion Windows PCs. So there's always these sort of multiple layers to what's going on as you go through these generational shifts. And what generally happens is that it's not that the old thing goes away, it just becomes less important. So Google is obviously still with us, and everybody said, oh, well, Google will just win social. You forget this now. Well, Google will obviously win social because they've got all the data. Guess what? That didn't happen. And then, well, Facebook will obviously crush Snapchat and obviously crush TikTok. Well, no, that kind of didn't happen either. Microsoft will obviously crush the web because they've got the endpoint. And so what actually tends to happen is the market expands with each new thing. And the old thing stops being the sort of central dominant paradigm where all the power is. But actually sit and make a list of how many new things Google has owned since about 2005. Take as long as you like, because it's a really short list. Same thing with Facebook. It's a really, really short list. And what actually happened is they just carried on making more Google, but all this other stuff happened as well. I mentioned Shopify earlier. Shopify is now did $160 billion of GMV in the last 12 months. Tell me again how it's impossible to compete with Amazon. Really, what happened is but that's a new thing. That's a completely new space. I think what we're seeing now, and I'll kind of go back to my car analogy, is it may well be that GM and Ford and Chrysler carry on dominating the car industry. But meanwhile, you've got Walmart. You've got all the stuff that happened because everybody had a car. And so the sort of general point here would be the first 50 years of the car industry is what's a car? What's a car company? The second 50 years is, well, what happens when everyone has a car? And that's kind of where we are now. It's the first 50 years of the tech industry is, well, what's a computer? Who's going to have one? How does it work? Okay, now everyone on Earth has got a computer. There's 5 billion people with a smartphone. So the next 50 years is, okay, well, what happens when everyone has a smartphone? And so I think Shein is really interesting in this context. Shein is basically a Chinese smartphone-only fast fashion company. It is now bigger in fast fashion in the USA than H&M and Zara combined. Now, I don't think anybody had Zara and H&M on their antitrust list, but this is now broken completely through all of the market dynamics of that space, and it's become the biggest fast fashion company in the USA in the space of sort of 2 years. Are they worried about do they spend any time at all thinking about Amazon? Absolutely zero time worrying about Amazon. They worry about what Apple and Google, what Apple and Facebook will do with their platforms. That maybe they worry about. And guess what? Apple isn't going to get into the fast fashion business, but Apple might do stuff that's a problem for Shein. So again, it's not is that competition? Well, that's not any kind of conventional market definition. Apple, certainly, you can argue Apple's in the games business. You cannot argue that Apple is going to get into fast fashion. And yet, does Shein worry about Apple's privacy policies on the iPhone? Quite possibly, yes. And so and is Shein a tech company? This is my my analogy. Is Walmart a car company? Is Shein a tech company? Is Netflix a tech company? And it might be that you end up in a world in 1970, GM still dominates the car industry, and then some other happens and the Japanese come in and completely obliterate them. But meanwhile, where was all the money being made? Did someone spend any time at all worrying about what Detroit was doing? No. How many companies do I see as a VC that are worried about what Google's going to do? Really?
Benedict, if I can just come in, I'm conscious we've got a couple of minutes left. This is brilliant, but Annabelle Gao has been waiting patiently with some questions, which you can see on your chat. This might be, if I may, Michael, just encourage a quick fire. Thank you, Annabelle, for being patient. The quick fire round, 3 questions. Can you see them rather than me reading them out? I'm sure you can see them on your chat.
Annabelle can unmute herself to make it even quicker.
Sure. Thank you. Thank you for a fantastic session. Always very insightful, Ben. Thanks, Michael and David for organizing. Yeah, 3 quick questions. One is, how worried are, according to you, GAFAM really about the new regulatory landscape, the changes? Do they think we can deal with that? Or do they think it's a really big deal? The second one is, what do you think they are going to do in response to this changing regulatory landscape? And the third one is, what do you think they should be?
So the first question, I think, if anyone here hasn't looked at the whole AB5 fiasco in California, I'd encourage you to go have a look. California decided, though, to pass a law that would say that Uber drivers were full-time employees. Reasonable people will have opinions about this. Unfortunately, the way they actually drew up the law, they banned freelance work. Literally, they banned freelance work. It was not possible to work freelance because if you took any kind of freelance job, you automatically became a full-time employee. And I'm not exaggerating. It was an absolute catastrophe, fiasco. And so I think one of the dominant things that they worry about is unintended consequences. They worry about a law that doesn't do what the lawmakers think it's going to do. And I think that's a big conversation. You worry about a law. I mean, I've mentioned Instagram a few times. We worry about a law that says that you own your own data and you can't move it out of the EU. Okay. I live in America and you live in France and I like your Instagram post. Where does that like get stored? Now, to any engineer, that's a meaningless question. And who owns the like? Do you own it or do I own it? I send you a message on Instagram. Is that my content or your content? These are meaningless questions until I've got a law that gives a 10% fine of global turnover that says I have to store it in Europe. And as an engineer, you're looking at this and saying, but I literally have no idea what you're asking me to do. I don't know what it means to say that a European's data has to be stored in Europe. Is that a European's data? I don't know. And I think that's a big class of question, is like you literally have no idea what that law is supposed to be saying. And if you're in Brussels, you think it's really clear and it's not really clear. So that's one category. I think a second category would be stuff like the labour law stuff that resulted in Deliveroo pulling out of Spain. So there are some relatively narrow categories where you could just decide to ban a category. If you understand you've done that, fine. But there are sort of some areas where there are laws that would actually just make certain kinds of business impossible. And there are sort of nuances to this, like, a lot of people would look at some of the proposals around the App Store and say, but that would be terrible because you'd basically be allowing any random developer to do whatever they want on my phone. And that's actually not a good idea. Yes, it would be great for competition, but actually that would be a catastrophe. And so there are those sorts of places where people mostly, I think, worry about unintended consequences more than anything else. I think, the implication of your question otherwise is like, yeah, if we all have to hire 10,000 compliance people, that's great if you're a giant company, because we can afford it. Facebook has 40,000 people working on human moderation. So, I mean, probably don't need to tell anyone on this call that regulation tends to be good for incumbents. And so I think that would tend to be the default. I think the concern would be, almost not you've tried to cripple us, but you crippled us without even realizing or understanding that was what you were doing.
Well, we could be speaking. I'm sorry, if you got
what
a third
will they do? One. They will go and argue. The risk is that they don't make a clear distinction between we don't want to do that because it costs us money and no, it's physically impossible to do that. That they don't always make a good distinction between you're asking us to put seatbelts in our cars and we don't want to, and you're asking us to make gasoline that doesn't burn and actually we don't know how to do that.
That's
and
great.
I think there's always a challenge
that's
there.
really interesting. So what do you think the big tech platforms should do? And what do you think they will do?
Well, they will and clearly are hiring enormous numbers of lobbyists and hiring enormous numbers of competition lawyers and trying to work out how they can thread these paths. I think there is always a sort of it's a separate conversation. There's always a sort of cultural gap between the US, where the argument is basically, did you break the Sherman Antitrust Act, which was written by, guys in wigs in the 17th century or something, versus the EU, which is you only find out you're in trouble when it's far too late. And so just understanding the processes is always kind of an interesting journey for American companies.
This is the first time that we have actually run over time. But with Benedict Evans, I think that this is not strange because there's so much content that it is impossible to keep within the narrow boundaries.
I talk too much,
the sincerest of compliments, Benedict. And I'm going to push my luck and ask one of the questions in the chat. Do you think that new movements like Web 3.0, NFTs, DeFi, Gaia, very heterogeneous list actually, have the power to build up decentralized ecosystems? I would probably put some of the AR, VR developments perhaps ahead of certainly Gaia X and some of them. But your final thought, what do you think? Forget a regulation, because I also agree that it is not likely to be as structurally impactful. Whether that's a good thing or a bad thing, we can debate. What about the other stuff? Give us your crystal ball.
Okay, so short answer on Gaia X, this is a joke, it's a boondoggle, it's a new Quero, it's just a laughing stock. To the extent anyone's heard about it, they start laughing when you've got halfway through explaining what it is.
Web 3. Let's think more about Web 3.0.
So Web 3
AR, VR.
Web 3, okay, so Web 3 is essentially saying that crypto networks are distributed computing systems, with incentives and governance built in. And so you could build Spotify or Shopify or Twitter on a Web3 network, or something similar, or something adjacent, or something new. And so this is a way of building, rather like open source, this is a completely new way of building, not so much companies as products and applications that would inherently not be run by a company. My default position is that this will probably evolve something like open source, in that it will be a hugely important enabling factor, but probably not visible to consumers, and probably be used to power new companies and be embedded within new kinds of products. But it's very, very early. It's like talking about the internet in the early 90s. What's this going to be? How's it going to work? Yes, this is big. It's very unclear quite what the structure of that would look like. But yes, everybody working on that says, but this is going to make Facebook irrelevant. You know, this is going to be the next wave of the internet. This is why they call it Web3. Metaverse, rather more tangible in one sense, in that it's AR and VR. But what would happen if you were wearing AR glasses all day? How much does that blend with pop culture? How does that blend with fashion and self-expression and identity? If you were to buy, 10 years time, everyone's wearing NFT glasses. I walk into a bar and you've got a cool pop culture thing hovering over your head that is powered by an NFT and that is shown to me by my AR glasses. That's not really tech any more than influencers or YouTube is really tech. It's pop culture. Who owns those? Who controls those? Who runs that ecosystem? Who builds that devices? Obviously, Facebook wants to build it because they've spent 10 years worrying about what Apple will do to them on the iPhone and have just discovered what Apple will do to them on the iPhone. Is Facebook the company best situated to build that? I'm not sure. By default, I would tend to say Apple is the best company to build it with all the hardware software integration, and Google is the best company to power it, because the real use case is I put on a pair of glasses and I look at stuff and it tells me things. And that's a Google kind of a problem, not a Facebook kind of a problem. Again, it's sort of like, another historical analogy. It's like talking about the mobile internet in 2000. Nothing happened for 10 years. European mobile operators spent 110 billion euros buying spectrum in 2000, and basically nothing happened until about 2010. And at that, and imagine trying to predict that it was going to be Apple and Google in 2000. Like, what? You'd be out of your mind. So these are very, very early, very, very interesting. The final thought I would put on this is, like, tech is not over yet, and this is a point I keep coming back to. Like, this stuff keeps changing, and the smartphone is not the end point. Web search is not the end, is not the final point. Is not the end of history. You're going to continue to have these generational changes that sweep aside some of the old incumbents and not some of the other incumbents.
What a terrific way! What a terrific final firecracker to end this year, to end this series. Benedict, it's been, as ever, a real pleasure, fun to discuss and lightly spar with you on these interesting topics. I'm sure that you would have much more to say if we had a bit more time. We've already run over. Fascinating. Thanks again, David. It's been a pleasure working with you this year in the gaming ecosystem advantage. And again, Sam Rowena and team and everyone in this webinar, and those who I know are going to be listening it post-fact. Again, thanks to everyone. Lots of really fascinating stuff ahead for 2022. Benedict, we much appreciate the time.
Thank you.
Thank you.
Thank you.